A lot of people are concerned about the markets. Are we going to see a much larger drop than what we've seen inside the S&P 500 and the Nasdaq so far? How could this flow through and impact crypto? In this video, we're going to talk about that and much, much more. Let's run the numbers. By being inside financial markets, you need many rules. This is a rule from the Masterclass, and it will help to explain what's going on right now. All markets are intercorrelated and interdependent. Unfortunately, many people in the crypto market think that the S&P 500, the Nasdaq, the Dow, and the Russell, they have nothing at all to do with crypto. Nothing could be further from the truth. The stock market is vitally important to understand, and of course it impacts crypto. And you can see that very clearly for yourself. That blue line is Bitcoin. And what we can see, Bitcoin going up and down, and it's following the stock market's gravity. This is a rule that we talk about inside the Masterclass. And just to give you a bit of an update, inside the service, the Dow and the Russell will be appearing from a structural indicator basis from the start of next month. The Dow and the Russell will join the Tier 1 charts. Rule 225 from the Masterclass: Bitcoin cannot escape the stock market's gravity. This means that the Dow, the Russell, the S&P 500 and the Nasdaq influence the directional correlation of Bitcoin. And this is important to understand because many people say, oh, I can't afford Bitcoin. It's just far too expensive and I'm not interested in it. It just doesn't move enough. There's a huge problem with that thinking, explained by Rule 45 from the Masterclass. No alt, for example, DOGE, Pepe, SHIB, anything, can escape Bitcoin's gravity. Notice Bitcoin's gravity. That's the key. Now, how can I prove that? It's actually really easy to prove. Let's look back at least 4 months. And what are we seeing here? That blue line that you see on the alt charts, this is Bitcoin's price direction. You can see here how Ethereum, as Bitcoin was coming up, what happened to ETH? It came up as well. Bitcoin came down, what happened to ETH? It came down. Bitcoin went up, you get the idea. What about Binance Coin? Yes, sirree. What about Solana? What about Doge? What about XRP? What about ADA? And what about SHIB? Yes, this is the way that the crypto market works. And you can also notice when Bitcoin is coming down, look at how it comes down on the other alts. This is gold-plated knowledge. If you understand this, you'll start to look at the crypto market like something that you can actually make a lot of money from. And if you're not investing and trading into the crypto market, whoa, you're making a mistake. The crypto market has outsized returns when it's compared to the stock markets. Ah, Ken, what would you know about that? Well, I've been inside financial markets for nearly 4 decades. Of course, I started in the stock market because crypto didn't exist, but crypto is awesome. Why, Ken? Why is crypto awesome? Because if you think about this, just say that you were going for the same job at 2 different companies. One paid you $200,000 a year and another one paid you $20,000 a year. Which job would you take? They're ostensibly exactly the same. Well, you take the one that paid you more. But when it comes to trading and investing, people get stuck in their ways. What a shame. It's probably just a lack of knowledge, but so many people are going to pile into the crypto space because they're going to start understanding it because of all the spot ETFs. So if you're in the crypto market, congratulations, you're a leader in the innovation space of finance. The Masterclass knowledge is really extensive. We look into so many things. For example, the yields, the Forex, gold, silver, commodities, bonds, the VIX. We look into everything and anything. We've seen recently that the VIX has been coming up. This is mainly driven by yields, and yields tend to drive the DXY up as well. This has placed a lot of negative price momentum into the major indices and therefore Bitcoin. Now you know what's causing problems. We saw a big ramp up in Bitcoin prior to the ETH ETF being approved by the SEC. We've now seen the ETH ETF outcomes, and it's just basically driven price downwards. Oh, if somebody could have anticipated this, you would have been much better off. But hang on a second, we did actually do that. We did the fractals as to what happened when the spot Bitcoin ETF was approved and the following price action. And we did that across Bitcoin and also across Ethereum. And you can see ETH is just matching that fractal pretty well at the current time. It was also done on XRP, and we can see XRP is starting to follow the fractal. Will it follow it all the way down? We'll talk about that in a moment. But just be aware, what are you focusing on? Are you focusing on this or this? We also did the Solana fractal, and we can see that's actually following the fractal rather well at the current time. Remember, are you focusing on the negative side or the positive side? We also did the ADA fractal, and we can see that ADA's price is currently following that fractal. What if it comes down more? Are you following on to, or are you focusing on the negative price momentum or what comes next? Maybe I could answer it this way. If you could go back in time and buy Bitcoin for $16,000 and it had played around that mark for about 3 months, if you could buy it for 16, would you have bought it? And of course, everything was rock bottom basement prices across everything at that time. We've also done the DOGE fractal, and you can see that's playing in through at the current time. And are you focusing on the red or what could come next if the fractal plays out? Very soon, the Binance coin BNB fractal will come out, the video explaining it. Again, what are we focused on? If it goes red, is that just a reason to sell because it's just going to zero, or could price be moving in a wave? That's one thing that we have to overcome as investors and traders, that fear. For example, was it a good thing to buy BNB as it was coming down here, or was it a good thing to buy when it came up and only for it to come down again? People can get caught on the wrong side of the trade continuously. Inside the Masterclass, I teach the CTKS method, which is the world's most powerful smart money buy and sell level detection system. Why is Bitcoin holding up far, far better than all the alts, even better than Ethereum? Why is that happening? The answer is it all comes down to structure. So let's just put structure on and have a look. What's actually occurring currently, when we put the indicator on, we can see this 66,900 area is vitally important. It is also very strong structural support. It's been activated in the past, and so far the buyers have been stepping in, as is witnessed by these long tail rejections. But of course, we know that Bitcoin is coming down simply because the main markets are coming down as well. And that's getting driven by increased yields, increased VIX or fear, and also increased DXY. And all of the members inside the service understand all of these intercorrelations because that's what we focus on each and every month. Always remember, fractals are fractals, but structure overrides everything. It overrides the news. It overrides fractals. It overrides narratives. It overrides everything. We can simply see above the 69,300 mark, we had so much structural resistance up here. Price couldn't get through it and confirm itself. We couldn't convert these particular structural resistance levels into structural support and go higher. And that was because of yields and the DXY as well as the VIX. With the Masterclass knowledge, all of this just becomes second nature. You look at the structure, which you can draw up yourself through the lessons, and you can see that if structure is stopping something from getting through, it obviously is quite strong, and these structural points are quite strong. They're way stronger than this structure around that 64,845 mark. And you can see these are lighter areas of structural resistance. This is a stronger one. This is a lighter one. And when they accumulate or aggregate, they form a little bit of a brick wall that's really hard to get through. So how do markets deal with overhead structural resistance? Well, they draw the shorts in until the shorts reach an area of structural support, and then the longs come in and liquidate them through these particular structural resistance areas. But don't forget, liquidating through is one thing, confirming it as support is a completely different thing as well. Doing your risk management is really important. You have to have 3 simultaneous strategies playing out at all times. A down strategy first, a neutral strategy, and an up strategy. We put those strategies together by doing CTKS paths inside the Masterclass, but also in Level 1 and Level 2 standard certification. These are really important to do. A lot of people would have basically said, when the spot Ethereum ETF was approved, that would have been Ethereum is going to the moon. It can never come down, only up. And as soon as anybody says only up, be very careful, they're clickbaiting you. Price is always moving in a wave. It's always coming up and down, and it just simply reacts to structural levels. That's it. A thing to also understand about fractals. Fractals give us an understanding of how things occurred in the past. They don't give us an understanding of how absolutely positively price will play out. It doesn't mean the price will continue to follow this fractal, and that's something that you should be well aware of because it's really important. What you need to understand is the structure underpinning the specific chart that you're putting money into. Understanding structure is a complete game changer. Let's have a look at the S&P 500. Looking at the S&P 500 from this manner is really difficult to decide. What is the S&P 500 actually doing? Why did it sell down from here? And where is the structural support and structural resistance? What you'll often see is people sounding incredibly knowledgeable. They'll say something like this, oh, it's going to come up to 53.07 and then get rejected. And if it doesn't bypass this specific level, and just rally, it's going to X dollars. Be really careful of those people. They don't know structure. Inside the Masterclass, I show you how to mark up structure as well as Level 1 and Level 2 standard certification. Just popping on the indicator, which is just a way to save you time, and you get that from the service. We can see that up here around that 53.36 mark, there was so much overhead structural resistance, a bit of a lighter one playing through this particular level. We had a lighter one here. You can see structural support here and here and here. One of the interesting things, when it comes to structure, there are multiple levels of structural support and resistance. Note, there is not a structural level there, there's not one there, there's not one there. What there are is a cluster up here, around that 53.36 mark. And these were so heavy that the sellers pushed it down immediately as it got in. There was a level of structural resistance just below 53.28, but we didn't even get there. And the previous structural support that was there around that 5300 mark just didn't hold. It needed to come down to structural support levels below it. You can see this 52.55 level of structural support was really good. All the buyers came in there and said, "Thou shall not pass," and flicked it up to the next level of structural resistance. But it couldn't hold. It broke down. Where did it break down to? The next level of structural support. But you can see we're not currently at that particular level, that 52.55 level. NVIDIA has been pushing the markets up, and we can see that specifically in the NASDAQ. But the NASDAQ above that 17,010 mark had structural resistance that it just simply couldn't get above. And we saw a big pull down. But what happened? There were so many levels of structural support below that particular price. It just flung it back to that 16,970 mark. But we've also seen that it couldn't confirm that and resume upwards to challenge that 17 17,010 mark. So what did that mean? If it can't get above a level of structure, it's moving down to levels of structure below it, and that's exactly what it did. So we've seen on the S&P 500 there are levels of support, and now there are levels of support inside the Nasdaq as well. In negative market terms, you must understand your levels of structure, especially when the market sells down, because the more safety nets you have below price, the more it will slow, and if they're very strong, the higher the probability of a turnaround and a catch in price. And that's exactly what's happened to the Russell 2000 right now. So we can see a couple of things. We can see a lot of overhead structural resistance inside the market indices, inside the S&P 500, the Nasdaq, and also the Russell. And we've also seen that there are areas playing out of structural support. The next ones will be around that 2054 mark, and they get quite heavy around that 2070. So just keep these particular levels in mind. They're really important. Unfortunately, when people don't know where the structural support and structural resistance levels are and how strong they are, they tend to just regard any particular price movement as a movement towards absolute zero. This is not the case. Price is just moving from structural level to structural level. If it can't get above, it's going below. And this particular structural level was very strong, and we had a negative fresh air gap below it and very minor structural support below that. So this is the reason the Dow Jones has come down so severely. Remember, when you're drawing up support and resistance, you must account for all of price history. You can't just look back a month or 2 weeks and say, these are the real levels. That's not statistically significant. Now, one thing that you can see very clearly from this, we've got a negative fresh air gap, and then we've got an absolute barrage, a thermonuclear amount of structural support playing below that 37,940 mark. All the way down. So just be aware, when everybody's going to be freaking out, if we close this fresh air gap, that's where all the support is. One thing to always bear in mind, this is a directional correlation between Bitcoin and the main markets. When you look at that blue line, which is Bitcoin's price, of course it's following the markets. That's very easy to see. A lot of people want it to follow perfectly. Oh, if it's not perfect, it doesn't follow it. Of course it's following it. It's absolutely obvious. And now you know why the Dow just collapsed like this. And it's going to collapse into rock solid support. That is structural by nature. So just as people are preparing to exit and just jump on life rafts right, left and center, where they will be selling is probably the bottom. Knowing where the structure is, and especially understanding how structure plays out inside the Tier 1 charts, is vitally important. It doesn't matter what you're trading or investing in, so long as you understand where the Tier 1 charts are going and then cross-reference to Tier 2 and Tier 3, you're going to be incredibly well informed, literally informed to the institutional level. If you're sick of guessing what the stock market and the crypto market and the currency markets are doing, as well as the commodity markets, it's time to understand structure, because CTKS structure determines price waves. That is a very, very powerful thing to understand. If you know where the structure is, you know that even in an uptrend, things can come down. But if they come down, they're coming down to a confluence of structural support, so the buyers can come in and liquidate the shorts. In a negative market, it moves exactly the other way. Price is coming down by nature negatively, and when it goes up, is to draw the longs in, to liquidate them down by the shorts. I'm very much looking forward to adding the Dow and the Russell 2000 into the Tier 1s. That will occur from next month. Please let me know in the comments, where do you think things are headed, and also what do you think about the US 2, the US 10 and the DXY. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.